Welcome back to your weekly market outlook. This is for the 15th of December 2025. So let's get started into what we have from last week. Obviously, the RBA not changing anything. FOMC does cut interest rates by 25 basis points. Again, we were looking at that potentially hawkish cut there. But this time around, they actually put out a little bit more of a neutral statement there from the US. If you take a look at the numbers there, not much has changed in terms of the unemployment rate in Australia. That one we see a little bit of an improvement there, but again, it's pretty much unchanged from the previous numbers. Just that we don't see that increase there. All right, this week, if we take a look at the calendars, a lot of very important stuff here. But I think if you want to really focus on what we should be looking at, it's obviously the Bank of England's interest rate decision. We are currently expecting a 25 basis points cut from the Bank of England. That's a drop from 4 to 3.75% there. And in terms of the ECB, not expecting any changes from the ECB. Then I think the key event that a lot of yen traders have been waiting for is basically that Friday event on the 19th of December. This one here, we do expect a 25 basis points hike from the Bank of England. The Bank of Japan. Now, previously, we were kind of looking at, more of a gradual hike there, maybe 10 basis points, 2 or 3 times in a year. It seems like the Bank of Japan is likely going to just be gunning for that 25 basis points hike. We might get a lower number, though. There's still potential for this one to be a 10 basis points hike instead of a 25 basis points hike. So, definitely market moving event, but I think the market has already been pricing in for this inevitable rate hike from the Bank of Japan there. All right, let's take a look at the market here. Aussie, as we expected, it is flat, it is stable, it stays within the range there. 64, 67 range is still intact. We were approaching that upper end of that range there. When we did our outlook last week, we say it's probably not going to break outside of it, and we did actually see the market starting to correct itself. Now, it's not oversold, it's not overbought territory yet, and we don't have a confirmation that much steeper pullback is going to happen. But the oscillators does point to that scenario there. All right. Euro, this one gains a little bit. Now, if you take a look at the movement on the euro here and on the sterling, it's not really because of the weakness in the US dollar. It's more on that push from the yen process. But if we take a look at the euro itself, this one here has transitioned above the Ichimoku plot. It looks a little bit top heavy at this point in time. We still have resistances building up there, starting from 1.18, so very close to that level there. Anything around the 1.18 level might see prices dip back down to 1.17. But the current condition here on the euro is that, it's on track towards that resistance, but we don't have any confirmation or not whether or not that resistance is actually going to hold. Similar situation with the sterling here. It is a little bit weaker here, and it does point to a lot of exhaustion in the market here. We did set a pullback there. It is still capped by 61.8%. It is rejected pretty much very close to a key psychological price level, which is 1.34. We're not able to push beyond 1.34. Beyond 1.34, we have a much stronger resistance for me at 1.35. And price, it's barely maintaining a position above the Ichimoku call at this point in time. So very prone to any dip down, any pullbacks here, and especially with the Bank of England expected to cut interest rates by 25 basis points. Any dovish comments on the reason why they're going to be cutting that 25 basis points, that's going to send this sterling tumbling back down to 1.32, potentially closer to 1.3 at this point in time. Last week, the Japanese yen. The Japanese yen, the resistance at 1.5, 156, 157, which is a level that we have been talking about for months, and price is finally stuck at that level. It's refusing to drop back down. If you take a look at what's on the chart there, The bounce off last week, we have that bullish order block level that's pretty much about 154. And as time progresses, the Ichimoku cloud is now catching up to price. So the support is actually building up. Really strong supports are actually building up around 152, 153 level. If you take a look at the oscillators here, it's dipping down really quickly, but price is not following that. So there might be actually be a little bit of a reset in the momentum. So this one here definitely still looks very, very bullish at this point in time, despite the potential for a Bank of Japan hike. Just giving us a warning here. Typically, when we see changes in monetary policy from the Bank of Japan, it does create a significant volatility in the market. So we do expect potential spikes that could be 4 yen, which is about 400 pips up and down.